Namaskar and hello everyone. The LIC IPO euphoria is upon us, but I would say read the offer document carefully before investing. Let me share some historical perspective with you. If you had invested rupees 50,000 in Maruti Suzuki's IPO, price at rupees 125 back in 2003, you would currently have about 31.63 lakhs as of today. If you had invested rupees 50,000 in MRF's IPO, price at rupees 11 in 1993, your investment would be currently rupees 3.6 crore today. This shows IPOs can be a gold mine for long-term investors, which is why a massive euphoria around a branded LIC IPO. Between 4th May and May 9, LIC will sell around 22.13 crore shares, or I would say 3.5% of its company to the general public, which makes the IPO size of around 21,008 crores. In fact, Axis Securities alone has created 45,000 demat accounts for the LIC IPO in last 1 month alone. And of them, 40% being to a people who are absolutely new to the market. So what it looks like, all that glitters is not gold. Let's see. Maruti and MRF are textbook examples of quality stocks delivering absolute good returns in the last 20-30 years. But the key word here is the quality, persistence, discipline, and a time horizon of 20-30 years. Let's look at some more historical data. In last 10 years, 543 companies have entered the equity market through IPO. However, around 62% of these companies don't even exist any longer. Around 7% of the companies have shed 50 to 90% of their initial value, while another 15% of companies have delivered negative returns. That means only 16% of companies have helped investors generate wealth in the long run. In plain language, only 3 out of 20 IPOs have been profitable in last 1 decade, that is 10 years. Even quality companies that had generated a lot of buzz around IPO can be cautionary tale for investors. Let's take example of Paytm. Stock had listed at rupees 2150 last November, and fast forward to date, the shares is trading around at rupees 600. That's almost 73% of investors' wealth wiped off in just 6 months. And this is why you need to consider the following factors before investing in LIC IPO or in fact any of the IPOs when you are applying for the same. Checklist number 1, check the company's valuation. The allotment price of red hot IPOs can be pretty high. Since these companies are aware of a market buzz and huge investor enthusiasm, they may charge a huge premium, the classic case of demand and supply. This is where many retail investors get trapped. One of the simplest way to identify the valuation of company is to check with the price to earning ratio, and this ratio also helps you to compare it with peers as well. Let's look at LIC IPO. The insurance company has announced the price band of IPO at 902 to 949 rupees per share. If we take the upper band of rupees 949, the LIC share will trade at a PE of around 202. That means an LIC stock costs 202 times of the earnings that makes on a per year basis. If you are new to this, let's make this even simpler. Let's compare LIC PE's ratio with its competitors. The industry average of life insurance companies is 80. SDFC Life Insurance trades at around 100 times of its earnings. ICICI Prudential trades at around 98.2 times, while SBI Life Insurance trades at 71.8 times of its earnings, giving example of few of the companies which are listed in the market. But do note that PE ratio is not the comprehensive indicator for insurance companies. Instead, we should take the embedded value to get a better picture. Now, if we want to take the embedded value and compare with its global peers, the LIC embedded value is at around 1.1 times, which seems to be expensive, but is definitely cheaper when it's pitted with against the domestic competitors like HDFC, which is at 4.05 times, and SBI Life at 3.1 times. Simply put, it's always wise to check the IPO valuation before making any decision with your hard-earned money. Checklist number 2, do your own research. Don't get caught in the artificial buzz regarding the IPOs. Read the company's prospectus to understand its long-term business, management, and the risk involved in the same. In LIC case, it has a market share of around 62% in the country, and its dominance might only improve over a long term. That's mainly due to the under-penetration of insurance and increased financialization of the savings in the country. Like all things, the LIC story is not a straightforward. It faces increasing competition from the private players such as HDFC Life and ICICI Prudential. Secondly, the rate of buying new life insurance is still not very high. Contrary to the popular perception, new policies have fallen to 7%, that too in the age of COVID. Furthermore, if you look at the VNB margin, which is value of new business, LIC has 9.9% profit margin as compared to its private competitors, which is between 22% and 27%. It's clear that we need to analyze the LIC story before participating in the IPO. Only then can we be confident about holding that business in the long term in that case. Checklist number 3, making sense of the listing gains. The attraction of listing gains is one of the major reasons why investors apply for IPOs. The LIC IPO is no different. As per several media reports during the rounds, the IPO is said to provide around 15 to 20% of gains on the day LIC makes its debut in the stock market. But the catch here is that the amount invested in IPO may not be very high. Typically, popular IPOs such as LIC tend to get oversubscribed, meaning that more people apply for shares than it's generally available in the market. For instance, if you read the LIC IPO is oversubscribed by 100 times, it means that 100 people have bid for one LIC share. Simply put, even if you are lucky to get LIC shares, you won't get your allotted number of shares. Therefore, you will have a small amount invested in IPO and will make negligible listing gains. Let's take LIC example here. Investors can bid in a multiple of 15 shares. Let's assume you bid for 150 shares, but on a day of allotment, you get one share or one batch of allotment, which is 15 shares. Even if you take the possible 20% listing gains, you would actually make a profit of only 2,847 on your investments. So this is where you need to check. Checklist number 4, potential multi-bagger. Even if LIC turns out to be a multi-bagger in the long run, it may not be significant because your initial IPO investment would merely be 14,235, which is the 15 shares multiplied by 949 rupees. Unless you keep adding LIC stocks after it makes the debut in stock market, the long-term multi-bagger would have little effect on your overall portfolio and also in fulfilling of your financial goals. Checklist number 5, check your liquidity. The LIC IPO could very well have 100 times oversubscription. If you do the math, you would realize that you have 1 in 100 chance to get LIC stock subscription. This is why people may choose to bid higher of 150, 300 shares to improve the probability of getting the application allotment in that case. But that would cost significantly high. In LIC's case, the person planning to bid for 150 shares would have to spend more than 1.42 lakhs. Due to the thrills of IPO and appetite for quick bucks, many people end up borrowing money or trading in a gray market, which is risky business. Kindly avoid the same. Taking debt for the wealth creation or investing in equity market can prove costly because the loan interest rate may be higher than the actual gains. And equally worse, people sell their quality stock assets to bid for the higher number of IPO shares. I would advise, don't do this when you are applying for your IPO. Check and then take your decisions. Now, should you bid for LIC shares? I would recommend to do your due diligence before bidding in any IPO. It is also important to remember that IPOs can help you make a quick profit, but IPOs alone can't be say long-term strategy to build your wealth. It's better to take a professional guidance by any financial advisor on investing and link your investment with your financial goals rather than chasing euphoric IPOs or hot IPOs. At the end of the day, what matters is your fulfillment of financial goals and having peace of mind and financial freedom. And I hope that you would take better decision when investing in any IPOs, especially LIC IPO also. With that note, I would say happy investing and peaceful investing. Thank you very much. Namaskar.